We're taking Pete's sake on the road. Joining me now is Peter Hug, Global Trading Director for Kitco Metals. We're here at the IPMI in Orlando, Florida. Peter, good to be with you here on location.
Good to see you again, Daniela.
So Peter, let's start. What's the sentiment like here at the conference?
It's a little somber. I mean, people are a little worried about the physical offtake in the market and just the general price action recently. Volumes are down from where they were last year when we had the conference. So it's a bit more of a somber tone than we saw last year.
So if we're not seeing an appetite for gold and silver right now, Peter, where is it?
Well, I think the markets are moving into the equity space, or capital's moving into the equity space. You're certainly seeing it in the U.S. market making new highs every day. And the European markets, after the ECB lowered interest rates last Thursday, and then Draghi's announcement that he would do whatever it took to stimulate the economy, created some lift in those markets. So we're seeing capital allocations going back into the equities, more into the risk asset.
So Peter, we've seen other summers be, not as exciting, and this is common for the summertime. But what do you think is needed to get excitement back into the markets right now?
Well, I think if we make new lows, which I certainly think are on tap for silver. I mean, gold still needs to breach through the triple bottom 1180 from last year. If we get to new lower levels, I think new buying interest will come into the market. But this market trading in a sideways range, which it's literally been doing for the past 6 months within a $150 band, is just exhausted demand and selling interest in these ranges, because these ranges have just been here too long. And coming into July and August, which are historically terrible months for the metals, would suggest that if we don't break this range before then, that it's going to be a very lackluster summer.
So Peter, is it a correct statement to say that the bears are in control here?
Well, technically the market looks terrible. I mean, you have the 50-day, 100-day, and 200-day moving averages all breached. Physical offtake, specifically in North America, is almost non-existent. Last Tuesday, the U.S. Mint indicated that they were, for the first time, dropping their allocation requirements for their dealers, meaning that any dealer now can go and buy any quantity of silver maple leafs that they want. Indicates, again, an oversupply of physical in the North American market.
Well, Peter, what about the U.S. factor here? There seems to have been too much optimism surrounding the jobs numbers. They were a miss, but that didn't do much to help gold, which it usually did.
Yeah, I mean, the U.S. economy is again, I wouldn't say it's torrid. It's moving along, gradually improving. Job creation between 175 and 225 is nothing great, but it's making steady improvement. There doesn't seem to be any inflationary pressures where the Fed is focused and the European central banks are focused. Equity markets are behaving well. The economy is on track, albeit growth will probably still come in at about 2.5% this year. Nothing stellar, but still growth.
All right, finally, Peter, on the PGM front, everyone seems to be talking about palladium and platinum, all eyes on these metals. Mm-hmm. What are you feeling here at the conference? What are they saying?
Well, now some of the dealers and some of the commentators are actually starting to speak well of the PGMs. I mean, I've been very constructive, especially palladium, for the past year. I still think we see a chance for a $1,000 handle on palladium by the end of the year. The funds that are offering palladium ETFs out of South Africa, the two banks, have done extremely well over 500,000 ounces of palladium offtake. You still have Russia somewhat unstable relative to the sanctions against them, and South Africa with the strikes, and even if the strikes are resolved, which again they attempted again last week, resolution didn't occur. The supply-demand fundamentals still favor the PGMs, in my opinion.
Peter, final thoughts for investors watching?
If you're a long-term investor, I think you need to hold your positions here. There's just a lot of potential problems that could occur. I think the next major surge in the metals is going to be an inflationary one, albeit I still think that that's probably a year to a year and a half out. But there's still a lot of flashpoints that could occur, so holding your core position continues to make sense. Recalibrate it against your overall portfolio and make sure you're still within your percentage allocation that you want. As for traders, again, I see this market continuing to be heavy, and I see a test of 1180, last year's triple bottom, still being a serious possibility.
Okay, wait, last question. If 1180 is hit, could we go down to 1,000?
we breach 1180, I think the next target I'd be looking for would be 1120, and then I'd have to reassess. I mean, it's not going to be a straight line down to 1,000, but I could make the argument 1180 breached, U.S. economic activity continuing, $1,000 may be a real number.
So Rubini's prophecy may become a reality. Peter, I'll let you get back to the air conditioning. Thank you so much.
You're welcome, Daniela.
And thanks for watching this edition of For Pete's Sake on the road here in Orlando, Florida. We'll be covering the IPMI conference, and we'll have more for you. In the meantime, you can email us any comments or questions and use feedback at kitco.com. Thanks for watching.